brutal out there. Bitcoin is at 32,971, means we're under 33,000. And I know you guys are a little bit upset about the thumbnail, but I do have to bring up one risk to you guys. If this risk actually happens, then the market could really capitulate. So today what we're going to do is I'm going to show you one or two risks that could take this market down further. I'm going to show you some hopium to show you how we could actually have a rebound pretty soon. And then together we're going to make a call on how best to trade this. We're also going to be covering the Luna situation in depth because I looked at the Luna at the UST Peg. The UST Peg is at 99.2 the last time I looked. Let's just have a look where it is now. Let's quickly just go to TradingView, see where the UST Peg is. It was the last time that I checked at 99.2, which means that UST is struggling to hold its peg. And if that's the case, that could mean big trouble for the market. So let's get up the Binance chart of UST. 98.98. Okay, so we are losing the peg again. It's going to be a big show. Stay tuned till the end because there's a lot going on here today. Alrighty, it's going to be a tough day today, but let's get the fuck out of bed. Yo, welcome back, Banter fam. I wish we were here under better circumstances and the market didn't look like this. So, I mean, it looks absolutely brutal out there. And if you're a Luna holder, it's even more brutal for you because Luna was absolutely smashed this weekend because UST lost its peg for a few minutes.
Brandt just getting his sound back. He's plugging it in. It should be like 20 or 30 seconds.
I think Jimmy, because I think we have to fire Jimmy because my microphones were in charge. We have to fire Jimmy here. All right. So as I was saying, if you're a Luna holder, this weekend was particularly tough for you. I know that because, as you know, Luna is one of my biggest bags. In fact, no, it's not one of my biggest bags. It's my biggest bag. And let me tell you, I've never had a more tough weekend on the markets than I had this weekend because Luna almost lost its peg, and it looks like it's doing it again. It looks like it might be doing it again. So we're going to dig into what's really going on with Luna and whether this is actually a systematic risk for the markets, because this Luna thing could be a systematic risk for the markets. I'll tell you why Luna could be a systematic risk for the market. So you take Luna, and we know that Luna revolves around one thing. Luna revolves around a algorithmically backed stablecoin and the protocol that powers it. That's effectively what Luna is. If you look at the market cap of Luna, let me just quickly get the charts for you guys. You guys can actually see it. I wasn't planning on talking about it this early in the show, but since we are here and we are talking about it, we've got to put it all out on the table. So people are saying, look, they're talking about the thumbnail and saying much more pain ahead. The reality is that if the stablecoin depegs, if the Terra UST stablecoin depegs, and we get into this death spiral, and for some reason they can't get the peg back up with all the things that are maintaining, you got to think about the fact that you've got the Luna protocol, which has a $20 billion market cap today, and you then have Terra, which has an $18 billion market cap. So you've got $38 billion, which could get wiped off the market if this thing doesn't hold up. So that's a real risk. If you're in crypto today, that is a real risk that you've got to be paying attention to. Besides all the other risks, besides the NASDAQ risk, and besides the macroeconomic risk, and besides the risk that Jimmy's going to get fired because my microphone wasn't fully charged. Take away all those risks. You've got to be cognizant of this one risk. If the UST stablecoin depegs, and they cannot rescue the stablecoin, then we could have a cataclysmic event happening on the markets here. I don't think we've ever seen a protocol with a value of over $38 billion with such a wide community ever get destroyed. Now, I'm not for 1 minute saying that I think that's what's going to happen. In fact, I think it's the exact opposite. I think it's all FUD. We're going to go through the FUD. I'm going to show you why I think it's all FUD. But if it does happen, that could take the crypto market down more than any other event has taken the crypto market down in history. Okay, so it is real, and we have to pay attention to it, and we have to get all the facts. But there is also some good news. So we'll talk about the good news. Let's get into it. It's going to be a big show. So if you're new to the channel, subscribe to the channel. We're the one channel that's here for you guys every single day, in the bull market and in the bear market. Even when I lost my voice the other day, there I was making shows. On Friday, I completely lost my voice. It was gone. I mean, you can hear it's not even properly back yet. Marcus Dunn, ran firing people. Yuri knows, bro. Yuri follows the channel. She knows, James. We must be able to laugh. We could also look at how to change the strategy in this market, because the one thing that we know for sure is that our thesis has been invalidated. Now, I'm always the one to come on here and say, we follow a thesis and we have to deal with, we have to take an outlook on the market. But the reality is that the market, effectively, no one can decide or no one can predict exactly what's going to happen on the market. And we have to deal with what happens on the market dynamically. Now, we were following a thesis. Our thesis was, when we broke out of this downward trend over here, we thought that, and we retested it perfectly, we thought that we were entering another cycle. We thought we were entering another bull cycle. The truth is that that's now been invalidated. What the market has given us has invalidated this thing. You can see that we've made a lower low on multiple time frames. We made a lower low here, we made a lower low here. You can see here that we're now breaking this support that Carl was preaching. We're breaking your 32,400, was it 32.4? What is your support level?
34 was.
That's broken.
Yeah, that's gone.
And now you've got this wick over here, this horizontal, this horizontal line over here.
That's the yearly low, which we've already wicked below.
You've wicked below, but you haven't closed below.
But that's bad. That's bad.
It's bad. So we've got to look at this and say, okay, whatever we thought our thesis was, we have now been dealt another hand by the market, and we need to learn to deal with that. Now, I mean, you can be angry at us, but the truth is, we just work with what the market has given us, right? The market has told us that we are, hold on, getting another cup of tea. Yeah, you can bring it. The market has told us that our thesis, the one that we prepared for, is invalidated. It's not invalidated in the long term. We still have huge conviction. The strategy still remains the same. If you're in tokens that are going to survive a bear market, you hold them, you try and get more yield, you try and get more yield in your stablecoins. Nothing else changes. But this short-term outlook that we had has to now change. It has to change. That's what makes a good investment, a good investor, what differentiates a good investor from a bad investor is how you can adjust your strategy to changes in what the market deals you. Because you never know what the market's going to deal you. You take a position based on data that you've got, and then you plan for the what ifs. And so today we're going to talk about the what ifs and what's going to happen. Why? Because what we have is we have the NASDAQ coming down, and I think the NASDAQ is now due for some kind of relief bounce. It's had a huge day down over here. It had let's just quickly see how big this day down here was here. And rest assured, when the NASDAQ recovers, Bitcoin is going to recover. So on that day, we had a 5% down. The next day, we had let's just get that ruler back again. There we go. We had another 2% down. And now I think we're down about another 2%. So the NASDAQ has had a brutal 3 days. And regardless of what you believe in the long term, in the short term, the NASDAQ is due for some kind of relief bounce. And I'll show you what could bring that relief bounce. Be that as it may, now, where we stand is we have big names in crypto, like Kyle Dupes and Peter Brandt. They're all calling for a $28,000 Bitcoin. So what you can see is Peter Brandt says, look, if we've broken that channel, chances are we're going to go down to about 28,000. And that's what people are talking about. Arthur Hayes, I don't know if you guys remember, but I spoke about a blog from Arthur Hayes, which was written, quite a while back. Let's just see when this blog was actually written. It was written on April 11th. So it's about a month ago. And on April 11th, what he said was, let's have a look here. He said something about wear your crypto crash helmet. Here we go. So he said Bitcoin is going to go down to 30,000 and that Ether is going to go down to 2,500. That's what he said. The good thing is that he didn't have any scientific explanation. He said, look, it's just a gut feeling. He said it's just a gut feeling. And it seems like his gut feeling was right. And when traders like that tell you that they have a gut feel, well, you kind of got to listen because these are experienced traders. And now Peter Brandt, who's a very experienced trader, is saying that Bitcoin is going to go down to 28,000. Now you got to ask yourself a question. Maybe Bitcoin will go down to 28,000. That's what everybody seems to be calling for. Everybody seems to be calling for this 28,000 level. But what is the risk reward? What is the risk here? The risk is that Bitcoin will go from where it is now, which is 32,802, and it will go down another 10, 12%, and we'll get to 28,000. And the reality is that if a lot of people are expecting 28,000, none of them are going to wait until 28,000 to buy. What they're going to wait is they're going to buy before 28,000 if they really believe that that's the level. So you're kind of talking about maybe another 10% downside if the bears are right and the pessimists are right and the chartists are right. Okay. If we break down below 28,000, then Carl, where do we go if we break down below 28,000? 24,000. If you break down below 28, you're going to get to 27. If you break down below 27, you're going to get to 26. If you break down below 26, you're going to get to 25. But the consensus is that Bitcoin is going to 28,000. And if that's the consensus, rest assured, people are going to start buying before that, which means that you've got 10% down before we hit Peter Brandt's target, for example. But what's your upside? Your upside is that we are already 50% down, more than 50% down from all-time high levels. And if you look traditionally at Bitcoin, we're 52.66% down from the all-time high. And if you look traditionally at Bitcoin pullbacks, it's very rare that we go down more than 50%. I will get Arthur on the show. People are talking about getting Arthur on the show. I will get him on the show. The only problem is that he's waiting to be sentenced in his trial. And he doesn't want to come on and upset the courts or upset the lawyers. So he said to me, look, he said, just chill. I'll come on as soon as I got the sentencing. It will be done. Everything will be fine. Okay. So now you got to ask yourself, what is your risk reward here? What is the risk reward here? The risk is that we're going to go down another 10%. We're already down 52% from the high. What's the reward? What is the reward? The reward is that we could get to all-time highs. And so right now, the risk reward to start dollar cost averaging is the best risk reward that we've seen. Root to Fi says since July last year, but I think it's actually since even way before that. Because remember, investing is not about getting it right. It's about the risk versus reward. How much risk are you going to take versus what is the reward that you're going to be getting? And so if you are looking for a time to DCA, then maybe now is a good time to start dollar cost averaging because you're getting things when Bitcoin is 52.66% down. So that's how you've got to view this thing. You've actually got to view it completely different. You've got to view it completely different. A lot of people are super upset about where the markets are. And look, I must say, I'm hurting. My portfolio has never, ever been done. I'm talking to millions and millions and millions of dollars. My biggest position, as you know, is Luna, and Luna is down 50% from its all-time high. So believe me that if anybody's hurting, I'm hurting. You know that one of my other big positions is Fantom. And I don't have to tell you what's happened to Fantom because of Rooster Rabbit and because of Andre Cronje and because of all the shenanigans. So believe me, if anybody's hurting, I'm hurting just as much as you guys are hurting. I'm holding all the tokens that we spoke about. But you got to ask yourself a question. From a risk-reward point of view, where were you better off? When the market was 30% higher than today, or 50% higher than today, or 100% higher than today, or today? And so when I walked in the office this morning, I said, guys, the first thing that I said as I walked in the office, I said, guys, this is when millionaires are made. This is the opportunity we've been waiting for. I never thought I'd get an opportunity to buy Bitcoin at $29,000. It's at $30,000, $32,000. Never thought I'd get the opportunity. So if you're looking for an opportunity, if you're looking for an opportunity to become a millionaire in crypto, then these are the opportunities you've been waiting for. The opportunity is not to take the money that you've already invested and see it grow. You want more buying opportunities. And especially because we know that the macro environment is causing this and that the future for crypto has never looked so good. So you have, I don't know, maybe a once in a lifetime opportunity. Maybe it's not a once in a lifetime. Maybe it's just once in a couple of years. But you have a once in a couple of years opportunity to get into crypto cheap. You got to see it that way. You got to see it that way. I know we all want Bitcoin to go to all-time highs and we're much happier at all-time highs. But if you're getting into crypto and you're starting to buy and you're buying, you want to be buying when the market is low. And I never thought we'd get opportunities to buy Luna at $60 ever again. I never thought we'd get an opportunity to buy Bitcoin at $32,000 ever again. And here we are. So now your strategy's got to change. And I'll talk to you in a second about how the strategy's got to change. It's all about risk reward. And actually, let me jump to this because this is absolutely amazing. So I picked up this video
to sell my Ethereum
of a guy who bought Ethereum at 26 cents. He picked up Ethereum at 26 cents in the public sale. And he is now selling his Ethereum. I want you to listen to the reason why he's finally selling his Ethereum. Just think about this. He bought them for 26 cents. They're now trading at $2,600. What return is that? That's a 10,000x.
Too much return.
It's a 10,000x return.
Yeah, huge.
10,000. The guy's got a 10,000x return, and he's now selling it. I want you to listen to the psychology of why he's selling it.
Hey everybody, after many years, I've decided to sell my Ethereum, my Ether that I bought about 8 years ago in the crowd sale at 26 cents. Just sold it for about $2,500 each. So what's the reason? Well, this bet used to be this kind of like very uncorrelated, weird thing. And what's happened over time is the quality of the return stream of these crypto assets has become extremely correlated with regular things. It seems like crypto is very correlated with venture capital. It seems it's very correlated with the NASDAQ. And it didn't used to be this way. And also, the NASDAQ obviously down 20% this year, over 20%, 23%. The VC index, if you look at the Refinitiv Venture Capital Index, look at that on Financial Times, you can see this like catastrophic drawdown in that index. And you can also see it in hedge funds that sort of report their returns like Tiger Global, down 44%. So you've had this huge bull run in kind of private equity venture. You had endowments kind of bragging about making 60% returns and thinking that they'd kind of cracked it by just sticking all the money into venture and private equity or crypto. But guess what? It's all the same bet. And everybody's just finding that out. Now, the other thing to look at in any investing is the risk-adjusted return. Bitcoin, Ethereum, obviously have had very, very, very high returns, but still, it's worth looking at the metrics in finance that are used to measure returns on a risk-adjusted basis. Consider this. Suppose the risk-adjusted return, there was a 2 Sigma report about this for Bitcoin. The Sharpe ratio, they say it was 1.3 since something like 2013.
Okay, so dude's selling all his Ethereum. He bought the Ethereum at 26 cents. He's selling all his Ethereum now. Why? Because he says the following. He said Ethereum has become too correlated to major markets. He also said that the risk-adjusted return on things like Bitcoin and ETH are not actually worth it anymore. You're not going to get the outsized returns. And that's something that I've been saying to you guys for a long time now. I said to you guys, I think we've got 500 days to make it in crypto. And I think that the days of these 100x's and 500x's are going to come to an end. And so that's why I say, I think now, when we have an opportunity to pick up our favorite coins that may still do 100x or 50x or 20x or 10x, then we need to embrace the opportunity. And we can't be running away like other investors. We can't be the ones panicking, especially when we are already in peak panic. Like you look at where we are. The fear and greed index is at extreme fear. Let's look at when the fear and greed index was previously at extreme fear. I mean, it's a handful of times. Look at that. If you go back all the way to 2018, once, twice, 3 times, 4 times, 5 times, 6 times. Since 2018, there only been 6 times when the crypto sentiment was this low. And every single time after that, crypto recovered and crypto did much better. So you got to change the way that you look at this market. You can't be looking at this market like a paper hand retail investor. This is the opportunity you've been waiting for if you've waited to make money in crypto. If you got in late and you got in when Bitcoin was at 69,000, now is your chance to be dollar cost averaging if you really have conviction in this market. Dollar cost averaging at 69 was fun Not for us though. Now is your time. B-Skin is right. He says capitulation is yet to happen. That is one of the things that I actually want to show you about. It's not only crypto. You've got NASDAQ stocks trading today. Some of them are trading at the amount of cash that they have on their balance sheet and even less than the amount of cash that they have on their balance sheet. You've got the VIX. The VIX monitors volatility, right? So the VIX is at 33.6. It did spike up to 35. And historically, when the VIX spikes up to 45, this is what happens with the returns. So we're in a point now where we're in peak fear. We're in peak fear from a stock market point of view. We're in peak fear from a crypto point of view. What happened? Why are we in this peak fear? What happened on Friday? We had when the Fed came out and spoke, we started getting this relief rally, and then it all went pear-shaped. After the relief rally, it all started to go pear-shaped. We got this green candle up when Powell spoke, and then it all went pear-shaped. What happened? Let's look at what happened. Well, Powell, you'll remember when Powell came on, he said 75 basis point raise was out of the question. Well, not out of the question, not being considered. Listen.
Steve Leisman, CNBC. Thanks for taking my question, Mr. Chairman. You talked about using 50 basis point rate hikes or the possibility of them in coming meetings. Might there be something larger than 50? Is 75 or a percentage point possible? And perhaps you could walk us through your calibration. Why 1 month should we, or one meeting should we expect at 50? Why something bigger? Why something smaller? What is the reasoning for the level of the amount of tightening? Thank you.
Sure. So 75 basis point increase is not something the committee is actively considering.
Okay, so that's what Powell came out and said. Problem is that the next day, Barkin from the Fed said he's not ruling out a 75 basis point rate hike. When he did that, the probability of a 75 basis point rate hike, especially after the European data that came out last week, became 91.4%. Okay, so that's what happened. The market thought the Fed doesn't know what it's doing. The Fed has lost control of the markets. Powell comes out and says we're not actively looking at it, and then you've got Barkin coming out and saying, "Don't worry, it is actually something that's on the table." Look, the good news is that now we're back to normal. Now there's an 84.7% chance of a 25 basis point rate hike, and so the market's saying, "Okay, cool, we've got this thing under control. We've got this thing under control." When Barkin said that, the dollar index went up again, and the dollar index is now again touching 104, and that sent the markets down. That's what happened. That's pretty much what happened. That's what happened. Then we got another bombshell. Now, this bombshell is going to be quite interesting as to how it plays out. We got a bombshell that US consumer credit, so that's the amount of credit that US citizens have, came in at 52.4 billion versus the 25.4 billion expectation. So 2.5 times, or just over 2 times the expectation. Just over 2 times the expectation. What that means is 2 things. One is Americans are spending way too much money. They thought that the good days would never end, and so they're spending way too much money. The second thing it means is that the Fed cannot raise interest rates too quickly. Because if the Fed raises interest rates too quickly, and you've got a record number of Americans holding debt, $52.4 billion worth of consumer debt, what's going to happen when the Fed raises interest rates by 75 basis points? The Fed is effectively going to wipe out these consumers who've all got their debt. So to me, that could bring in a relief bounce. That could be one of the reasons for a relief bounce. That's the reality of it. All right. Where are we? Let's just look at where we are now. So we have fear in the market, but it's not. What's the word I'm looking for? It's not peak fear. I don't think people are. Yeah. I saw this. We're seeing peak fear, but we're not actually seeing panic yet. I think the end of this will be when the market panics. So I think there's a big difference between fear and panic. We're in peak fear. We're not in panic yet. This chart, when it goes below, when it goes down here, when it goes below 0, that's when we're going to start seeing panic. And yeah, so that's what I think. I think that what you can see is that some whales are starting to actually buy again. Whales are starting to increase their holdings a lot. The Bitfinex longs keep going up. Whales keep buying and buying and buying. And I think they're buying in anticipation of next week. Well, sorry, this week. On Wednesday, we have the inflation numbers which are coming out. Now, I said to you guys a while back that I think what's going to happen is we're actually going to get favorable inflation numbers. When I say favorable, I mean that either inflation isn't going to increase too much from the 8.4% that we had last time, or inflation is actually going to come down. And if inflation comes down, then what happens? I'll tell you what happens. Market bounces, saying, hey, hold on a second. Maybe the Fed's not going to have to be as radical because inflation's already starting to come down. What they didn't say, so you can see right now, the forecast is 8.1. Okay, so the forecast is 8.1 for Wednesday. So on Wednesday, we'll cover this for you guys and let you know what the actual number is. Remember, I said this to you. I know that the reason why the inflation is going to come down is because they're comparing it to inflation on a high base. The last time they measured inflation, the last April it was 4.2 and it came up from 2.6. So you're starting with a high base. And if you're starting with a high base, then you're going to get a much lower inflation reading, even though inflation continues to go up, because you're measuring it against a much higher base. And that's what's starting to happen now. So I think regardless of what happens, we are going to see a relief bounce at some point. We're going to see a relief bounce. It may be short-lived, but in history, every time I've seen this, and remember, I've only been here since 2015, every time that this happens, we get a relief bounce. In fact, every single time this happens, the market recovers, and the market recovers much better, much stronger. So that's what I think is going to happen. So what do we do now? I mean, what do we do now? This is where we are. This is what the market's dealt us. This is where we're at. This is where Bitcoin is at. We're under 30. We're way now below under 30. We're 32,700. We're under 33,000. What do we do now? What's the strategy now? What is the strategy now? I'll show you. Okay, so I think what we do now is we got to reevaluate what our strategy is. Because what we know for sure is that our long-term thesis doesn't change. I still have as much conviction in crypto and in Bitcoin and in Ethereum and in Avalanche and Neo Protocol and in Luna as I had before this downturn. This is a downturn in the market that is driven by macroeconomic factors primarily. And it doesn't affect the long-term adoption or the long-term way that crypto is going to do it. It's going to change the world. So you got to change your mindset now. One is the biggest change in mindset that you got to have now is patience. And patience actually comes in two forms here. The first thing is you've got to create a buy list. You have to create a buy list. You have to create a shopping list. I showed you guys, I have a shopping list now. Let me quickly show you where it is. So I've got multiple portfolios on CoinGecko at the moment. I have one called Watchlist. And Watchlist is actually the only one that I'm watching right now. I'm not looking at the other watch list at all. I'm only looking at like 10 coins, maybe a bit more, maybe 15 coins, because these are the ones that I want to buy. Remember, I said to you, I want to buy ApeCoin. My target price is between $5 and $10. My target price for Rune is just it's actually now like $5. My target price for Lido DAO is $2. My target price for Luxury is $1. And so what I've got is I'm only watching these tokens, because watching the other tokens on my watch list is actually going to make me do stupid things. It's going to make me panic. It's going to make me get distracted. I know what I want to buy, and I know what my portfolio what I want my portfolio to look like, and I know what's missing. And now I've set myself buy targets. And so now you have to exercise patience. The first part of patience means the patience to not buy unless they hit your buy target. I know that out of the 15 coins in this list, I'm probably only going to get 7, and I'm cool with it. I'm very, 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 very cool with it. I don't need to buy more. Second thing is, you need the patience to hold, because I don't think that this is going to be a quick recovery. I don't think that in a month's time we're going to be back at 60,000. I don't think that that's going to happen, because we're dealing with macroeconomic factors. And you got to remember one thing. The last 2 economic collapses were caused by external things. The first one was the 2008 housing crisis. That was caused by a systematic failure. Then you had the COVID collapse. That was caused by a virus. Who could have predicted a virus, except the Chinese that actually created the virus? You know how to say that, because then you get banned off YouTube. If you say that, you get banned off YouTube. This is not that. This is created by the Fed. This situation was actually created by the Fed. Yeah, this situation was actually created by the Fed. So you got to be patient now. You got to focus on the strategy. And tomorrow we're going to talk about a bear market strategy to get you guys out of it. Because today I want to talk about 2 other things. First thing is the Cardano community jumped down my throat. I mean, I don't understand. I think I'm one of the most active members in the Cardano community. I think there's a lot of influencers who are actually very much against Cardano. I'm actually not that guy. I invite Charles to the show. I'm quite positive about his approach and whatever else. And I came out and I think I said pretty bullish things about Cardano. And if you didn't see that video, go and watch it. But then when I said that there's not even a real working DEX on Cardano, everyone jumped at me. Charles Hoskington jumped at me. People were sending me private messages threatening my life. I was going to tweet like Elon, if I disappear tomorrow, it's been nice. If I die tomorrow, it's been nice knowing you. That's how bad I thought it was. So what I did today was I thought, look, just, because I almost have to, like, as a punishment, I have to actually review the Cardano DEXs. So what I did was, the first thing I did was I started using the first Cardano DEX, which was SundeaSwap, okay? And the reality is that I tried to put through 3 transactions today. 2 of the transactions didn't work at all. And 1 went through today, but it took a long time. So what I thought is I'll do it on live for you guys on here. Here we go. I'm on SundeaSwap, and I'm going to now buy. I'm going to spend 1,000 Cardano. And let's spend 100 Cardano because we want to do this for a long time. And I want to put a transaction through live. Okay, so I'm going to do it, and let's move on with the rest of the show because it's going to take some time. Okay, so I'm going to order the swap. Okay, let's wait. It'll ping us when it's ready, so we can move on to the next story. Here we go. Okay, just time this transaction, Carl. If you could just time this transaction, because we might be here for quite a while.
Someone call the devs.
Okay, it won't be to enter my password. Okay, I will send that. There we go. Transaction time. Time the transaction, Carl. It's pending. We can move on with the rest of the show. I'm sure it'll tell us when the show is ready. Okay. I do want to talk to you now about a systematic risk. This is a systematic risk. We've got to talk about it. I know it's not pleasant to talk about it. But as I said, this weekend, there was an attack on Luna. It could have been a coordinated attack. In fact, it may have been a coordinated attack. I think it was a coordinated attack. I think it was a coordinated attack. What we saw the peg. We saw the UST peg go all the way down to 98.6, more or less. And then it was recovered. And now, as you can see, we're fighting for the peg again. The peg's coming down again. And I said that this is a systematic risk to crypto. The reason why this is a systematic risk to crypto is because we've never seen a layer 1 protocol with such big TVL fail. We've never seen a layer 1 protocol with $18 billion in a stablecoin plus $20 billion in a protocol fail. And if that happens, we've got a failure of effectively more than $38 or $40 billion in crypto. So it's important that we understand what's going on. Important to understand what's going on in the Terra ecosystem and decide whether or not this is a real threat. And if it is, well, decide what you want to do about it. I know what I'm doing about it. You got to do what you want to do about it. So let's just quickly check on our Cardano transaction while this is happening. Okay, we've ordered it. It's still waiting to be scooped.
2 minutes.
Yeah, it's waiting to be scooped. We'll leave it like this. Yeah, we'll just leave it like this. Okay. Tomorrow we'll review, because I know there's other DEXs on Cardano, so we must review all the DEXs. We have to review all the DEXs. It's only fair. It's only fair. We'll review all the DEXs. On SundeaSwap, I haven't had a great experience. I'm going to be honest. Another thing that worries me, as I said, is if you look at Cardano, the total value locked on these exchanges on SundeaSwap is $40 million. All the liquidity pools together are $40 million. That's very scary. If you want to trade size, there's only $40 million worth of liquidity. And WingRide has also got $50 million. And MinSwap has got $80 million. So it's very small TVL. But regardless, as I said, I like the technology, so I'm giving it a shot. Okay. Okay, we'll just wait for that. Maybe the transaction's gone through and it hasn't changed the screen. I don't know. Anyway, let's talk about the big story. So I mentioned that this could be a cataclysmic risk. So let's look at actually what happened and decide whether this was a coordinated attack, because it could have been a coordinated attack. On Saturday, when Luna was moving money from the Curve pool, okay, all of a sudden, there was a massive seller in the Curve pool where they had removed their liquidity. So Luna was moving money out of a pool so that they could fund another pool. They could fund pool 4. They were removing money. And as they were doing it, all of a sudden, a seller came into the market and started selling $84 million of UST to Ethereum. Okay, so that's what he started doing. So they gone to Curve, and because there's very, very little liquidity, the problem is that the price goes down and it breaks the peg. And then what happened was this circulated all over Twitter. People started to get scared. Their conviction in an algorithmic-based stablecoin started to be tested. And so what did they do? They started panicking and getting out of the algorithmic stablecoin because they said, hey, if this house of cards is falling down, if this algorithmic stablecoin is going down, then you got to be careful. You got to be super careful. And that's what happened. And as that happened, Anchor Protocol got smashed. Okay, the total value locked in Anchor Protocol went down from, I think, about 14 billion and is now at about 11 billion. Let's actually look at where it is right now. Right now, it's at 10.521 or 10.517. So the people started to cash in and remove their liquidity from Anchor Protocol. And so we started to get this panic that happened. So let me just show you Anchor Protocol. That's Anchor Protocol. You can see it's at 10.517. So we started to get this panic in the markets, and that panic in the markets took the peg down to 98.7, 98.2, which you saw over here. Then somebody came in and started to try and rescue the peg. Okay, so here are all the transactions. You don't have to look at the transaction. I think it's just a bit of a waste of time for us. Now, I've verified all the transactions, and you can see exactly what happened. It's exactly what I said to you. Then we had somebody, we think it's Jump Capital, try to rescue the peg. How did they do this? They started to take their Ethereum, which they had staked up, and unstake the Ethereum, and then use that in order to buy UST to control the peg. And they managed to get the peg under control. So let's just recap the situation. You've got a pool on Curve. Curve is an exchange for stablecoins, effectively. As Luna were removing $100 million from that pool to move into pool 4 today, they got attacked. And people started selling UST, $80 million worth of UST. That took the peg, the UST off peg. And then Jump, we think it's Jump, came in and tried to get the peg back under control by selling ETH and about buying that. And within, I'd say about 12 hours, we got the peg back to 0.995, 0.996. But the fiasco is not over, guys. The fiasco is not over, because if you look at where we are now, we are at 0.981. We are at 0.981. And so we right now are not back at peg. All right, let's see what this actually means. So the first thing is, we started to analyze the data of who actually started to take their money out of Anchor Protocol. Who was the guys taking money? And what the data shows, and I'm not going to bore you with all this data, but what the data shows is that the people that withdrew the money from Anchor Protocol were actually not 99.1% of the market. In fact, it was 75% of the movements came from accounts with balances bigger than $1 million. So it means that 99% or 90% of the market didn't do anything, but 91% of Anchor deposits slept through this. But there were some big whale accounts that started to withdraw their money from Anchor Protocol. And that's what happened. All right, then we got UST back to peg, there or thereabout. And then Kwon came out and he started to reassure everyone. I think he was quite, he was himself. I'm up, I'm using morning. Anon, you could listen to crypto Twitter influencers about UST depegging for the 69th time, or you could remember they're all poor now and go for the run instead. Okay, so then, as if that wasn't enough, His Excellency, Justin Sun, comes into the picture, because he always comes into the picture. Wherever there's a noise, Justin Sun's always there. And he says, hey, I'm buying UST. And then Kwon said, Your Excellency, what are you up to? And then he created a UST USDD. USDD is the stablecoin on Tron. He creates this UST USDD stablecoin on Uniswap. And he says, come and trade. So he's doing his bit to protect the thing. Now, remember, the Luna Foundation have bought over $3 billion worth of Bitcoin to protect the peg. That's exactly what the money was for. And up until this point, they haven't actually utilized any of that money to protect the peg, because they said only if the stablecoin goes below 98, that is when we're actually going to start protecting the peg. So up until now, they haven't used any of that money to protect the peg. But then this morning, the Luna Foundation Council voted to deploy 1.5 billion. And how they deploy the 1.5 billion is 0.75 billion in BTC and 0.75 billion in UST. And they combine this into one pool, and they use that to protect the peg. When the price of UST drops, they sell Bitcoin for cheap, but you can only buy it using UST. And the result is people will buy UST to buy the Bitcoin cheap. And that's exactly what they're doing. But unfortunately, the automated system for doing that is not ready yet. And so they deployed it to the market makers in the form of a loan. And they said that they're going to use this loan. So it says The goal is to have the capital in the hands of professional market makers to protect in case this happens. We don't know if it's going to happen, not going to happen, but rather if this is going to happen, let's have the money ready to protect the peg. Let's not wait for it all to collapse and then try to protect the peg. Okay, so we'd hope the on-chain Bitcoin reserve system would be live by now, but it's not live by now. So because it's not live by now, we have to wait until it's live. And for now, they're doing it manually with the market makers. So they've deployed $1.5 billion, of which 0.75 is their Bitcoin, to help protect the peg. And so there's another backstop. If we do go below 0.98, then we should have jump capital and I think one or two of the other market makers. I think 3RS Capital might also be involved here. They will also be there to protect the peg. It's super important that you keep your eyes on this. I'll tell you why. I said this in a tweet. You should be following me on Twitter. If you're not following me on Twitter, follow me on Twitter. You got to think that the collapse of UST or Luna now is a systematic risk to crypto. It's bigger than any risk that we've ever seen in crypto, in fact. Really, we haven't seen a situation where $100 billion or $60 billion or whatever the number is, $30 billion could implode. And this could be it. And so regardless of whether you are invested in Luna, not invested in Luna, if this goes down, the whole crypto market's going to go down with it. Bitcoin's going to go down, Ethereum's going to go down, all the altcoins are going to go down. And so everyone here has a vested interest to make sure that Luna succeeds. Every single person in crypto, whether you like Luna, hate Luna, you have a vested interest to make sure that this succeeds. Even if you're a no-coiner, you have a vested interest to make sure that this succeeds. I do just want to also give you perspective that even after this whole attack and everything else that's happened, Luna's only down 50% from its all-time highs, which is exactly the same as what Bitcoin is and the same as what ETH is. So Luna's holding up pretty well. Yeah. I thought that this was a very bad tweet. USD tweets and said, seriously though, Jeremy Allaire would never have to tweet this, referring to Do Kwon's tweet. And then he tweeted, he said, I slept like a baby and so do our users. Well, when I'm holding UST, I don't sleep like a baby. I'll tell you that much. I don't sleep like a baby if I'm holding UST. Because if the government wants to censor UST, it's censored. And I don't know what backs UST. In fact, I do know what backs USDC. I don't know what backs USDT though. So I think it was a nasty tweet and really unwarranted because I don't think the two are competitors. I think USDC is for people who want a centralized stablecoin, dollar-backed stablecoin, and UST are very different. Very different, very different. All right, let's carry on. Yeah, so as I said, we've got to watch Luna because Luna has now become something that we all have to watch. We have to watch it. You know, even though we like the concept, remember the concept of a algorithmic backed stablecoin is pretty new. It's pretty new. And we've never had an algorithmic stablecoin backed to part by Bitcoin. So you got to be super careful. You got to be super careful now and watch what's going on. It is my biggest position. As I said to you, you know this. I've spoken to you guys a lot about this. You know, it is my biggest position. All right, let's see what's going on. People are freaking out that the market's really going down now. Has something happened? Has Bitcoin gone down even more? 32.5. There we go. The buying opportunities are coming, guys. Generational. The panic is coming as well. The panic is coming. You know, when there's panic, that's the time to buy.
Under 30 is where the real panic comes.
Under 30, where the real panic comes. Please God, it gets there and I can buy some under 30, but I don't think it's going there. But maybe it will. Who knows? Maybe it will. If it is generational buying opportunity, we may not get these buying opportunities ever again. I do want to talk to you about Near Protocol. I'm not going to do it now though, because Near Protocol is actually backing the trend. Everything else is down. Near Protocol is pretty stable. I want to show you what's going to happen. Let's go back to our Sunday DEX picks. Let's just see where we are. It says waiting to be scooped. I don't know what that means.
13 minutes.
But I don't know what that means. Hold on. Maybe.
You want to use the spoon when you do the transaction.
No, but very seriously, what does waiting to be scooped mean?
I assume someone has to take
It may have worked. Hold on. It may have worked. It says completed if you click on it. Here it says completed. Maybe here it says completed. It just said waiting to be scooped, waiting to be scooped, waiting to be scooped. But then it was scooped at 4:47. So maybe just the alert's wrong, Kyle. Maybe it's just the alert that's wrong. Because it does say here it was completed a minute later. That's what it says. That's what it says. I don't know. We'll keep doing these Cardano reviews. As I said, I'm a Cardano holder. No need to hate me. I'm a Cardano holder. I don't hold as much Cardano as I hold other stuff, but yeah, we'll keep doing the DEX reviews. I mean, again, I got to highlight that right now, the liquidity on the DEX is very, very, very low. So if you want to put in big orders, I can't see any whale coming here to trade 10 million. You can't trade $1 million. You can't. Not yet. But it will come. It will come. All right, one more thing. So we have a new sponsor to the channel. The sponsor is BBS. You know, we love BBS. We've been supporting BBS. We're holders in BBS, etc. They are a new sponsor to the channel. And so every day we're going to find a post on BBS that we think is good. And I found this post on BBS, which, again, it's on the Banter BBS. If you're not part of the Banter BBS, go and check it out. We are the second biggest BBS in the world. But there's this guy called, I think it's Kwon. And he publishes a crypto newsletter every morning, which is like, on BBS. He talks about what's going up, what's going down, what the fear and greed index is doing, what the events are for the day, etc., etc. This is one of my real go-tos in the morning because everything here is, it's nice to wake up and get something like this. So if you're not already on BBS, go to BBS. The fun part here is that someone's already purchased this post for $15.35 and already made $3.41 on the purchase. Because remember, every post here is actually an NFT. All right, I will see you guys again later on the Microdose channel and the Crypto Shorts channel. I'll see you guys there because I want to talk to you guys about Near Protocol and why I think Near Protocol is actually back in the trend. Also remember, tomorrow we start doubling and 10xing and maybe even 100xing people's portfolios on Bybit. If you don't have a Bybit account, go to Bybit, use the referral link below, open a Bybit account, deposit money into the account, and every day we get to double 10x, 20x, 30x, 40x, 50x people's portfolios. I'll see you guys again tomorrow. Remember, this is an opportunity. You got to decide how you're going to utilize this gift, this opportunity that you've been given. I'm going to show you how I'm going to do it tomorrow. Until then, trade well, my friends. They didn't like the thumbnail. They didn't like the fact that I was being true and honest.
They don't want lower prices.
Yeah, no, but it's not that. I said on the thumbnail, what did I say? I said more pain ahead. And the truth is, there could be much more pain ahead if Luna collapses. Can you imagine what happens to this market? Sure. It's crazy. So I don't know. We got to